We have also as a speaker for today's event Miss Mr. Ifeanyi. He's a tech entrepreneur, a stock investment consultant. He is a financial market expert focusing on the stock market, a tech entrepreneur. He's the founder and CEO of NeuraBridge alongside Sarah Spark. Let's welcome Mr. Ifeanyi, the CEO of NeuraBridge. Thank you very much. Thank you. Thank you very much. Okay.
Greetings, everyone. Can we hear me?
Good evening, sir.
Can
Thank
we
you
hear
so
me?
much. Yeah, we can hear you. We can hear you. Thank you very much.
Okay. Wow. So sorry, everyone. It's amazing how just being up on the network and our even Nigerian network knows how to mess us up sometimes. So I really want to appreciate everyone here having joined. The first session was great. I really learned a lot, and it's a pleasure to take us through the second session. I'm going to get right into it right away. Now, just before we get started, my goal is to, within the next 15 minutes, right, I want to expand our mind on the power, the potential of building wealth using the stock markets. Now, I really want us to, within this few minutes, right, to give our best attention, make sure that you're not distracted by anything, and I promise you, you're in for a treat. So my name is Ifa in God's favor. I'm the founder and CEO at NeuroBridge Technologies. I'm a serial founder and I'm also a stock educator. Now, everyone can see my screen, right? Just to confirm that.
Yes, sir. Sure, we can see it.
Awesome. Okay, so okay, so okay. Yeah, so basically what we are just basically at NeuroBridge we are all about bringing connectivity into the financial markets, helping people to be able to harness wealth, leveraging various areas of the financial market. Now, I would like to start out our session tonight with a very interesting story. So this thing happened this year. Remember, like I said, I want to, expand our minds on the power, the potential, that the stock market has for us if, we will let it. So this happened this year. This story basically came out about Anthony Scaramucci. Anthony Scaramucci had invested about $1,200. This was in the year 1992. And he invested that money in Microsoft. Now, I want us to really visualize this. This was $1,200 that was invested in Microsoft at the time for his newborn son. And something interesting happened. He lost access to that account. And as you can imagine, because in those days, investing was not as simplified as it is today, where you can do it from the convenience of your phone. But, as then, he lost access to that account, and that led to him forgetting about the investment entirely. Now, remember that he invested that money because of his son. So you can visualize whereby when 30 years later, that account was recovered. Now, here is the interesting thing. 30 years later, that account was discovered, and to the amazement of Anthony Scaramucci and the entire family, what was originally a $1,200 investment had become a $288,000 investment. I really want us to allow that to soak in, just a bit. Let's think about that. $1,200 was invested, and 30 years later in Microsoft, it was $288,000. Now, this is no joke. You can literally on your phone, you can literally type the name Anthony Scaramucci, and then you ask, what happened. This news came out this year. Now, someone would say, come on, because what this translates to is into over 23,900% returns. Guys, that is no fable. 23,900% returns. These are the kind of things that when you mention it, especially to most of us, Africans, Nigerians, the first place our mind will go to is na scam. You get na scam. They don't come again. But this is real, guys, and this is the power of the stock market. If you calculate this, this is equivalent to almost about between 800 to 1,000% gain every single year for 30 years. Isn't that interesting? Right now, someone would say, but come on, as in this is, this is the US, it can never happen in Nigeria. We know our own Nigeria. Well, you'll be very shocked, to be very wrong. As a matter of fact, once again, this news came out this year as well. So something interesting happened. Our able first speaker spoke about lots of things, and he spoke about the dollar, and as if he knew what I was going to do. He mentioned, he hinted that I would, possibly talk about the dollar, and that's exactly what I'm going to be doing. Now we know the dollar. The dollar. Can we hear me, please? Just to make sure I'm carrying everyone along. Can we hear me?
Yes, sir, sure.
All right,
We can
awesome,
hear.
awesome. So Otedola, this news came out. Otedola is a serial entrepreneur, owns many stuff, because one of the things we love to promote heavily at New York is that we love to basically let people understand that there's not one wealthy person, not one person, not one who you can point to who is super rich, that most of their money cannot be traced to the stock markets. I guarantee you that. So this year, something happened. Apparently, it was discovered that he had bought about 3.7 million shares in Geregu Power. So you can see these little power lines here. So Geregu Power, it's a Nigerian company that deals on electricity power distribution, basically. So he bought 3.7 million shares. Now, let's put that in money spent. So that was over 789 million spent. So in other words, he used 789 million to purchase, as in the stock, right? And that this 789 million, I think it's basically amounted to about 6% of the company or so. But the point is this: he bought that stock, you get, at 213 naira per share. Now, guys, we are in for a treat, right? So let's see. In 2025, this year, something spectacular happened. Now, remember, look at this. He bought the share at 213 naira, and just 2 years later, he was selling that share at 1,150 naira. Do we know how many percent returns that? And of course, he sold over 4 million, like he sold most of his shares. That's not all, because he accrued more, over time, but he sold about 4 million shares. Now, guess what, guys? Selling now, let's remember, okay, this is a little detail. So he spent 789 million. By the time he was selling, off the shares, what he made was 4.6 billion naira. 4.6 billion naira. Now, the question I would really like to ask us is, just ask yourself, what were you doing between 2023 to now, 2025? So while maybe we're busy thinking about so many things or doing, the rich was busy accumulating wealth. And how did they do it? Just one investment. And do you know what that translated to? It basically translates to over 439% returns on investment within 2 years. So I said I was eating free, guy. Within 2 years, over 439% returns. Now, hello guys, once again, I welcome us to the stock market. This is the stock market basically, and what you have seen is a clear depiction of the power of investing in stocks. Now, someone might say, well, maybe it's that stock, maybe Otedela, was lucky. After all, it is Otedela, right? But the funny thing is that that's not the only stock that has done amazing. Within the past 5 years, just within the past 5 years, I mean, let us trace, this is 2025, so let's trace down to 2020. From 2020 to 2025, right? Let's see what some stocks have done. Remember that 2020 was the year of COVID, right? So while many people were, oh my God, thinking about how, the crisis and everything, builders were building. And guess what? Look at what some of these stocks did. NACO did over 6,000. In other words, if you had invested in NACO 5 years ago, from that time to now, you would have enjoyed over 6,000% returns. If you had invested in Transcorp Hotel, you would have done over 4,000% returns. That means 1,000% every year, almost 1,000%. Okay, that's for NACO. I don't know if we're together, please. Sky AVN is about nearly about 3,000% returns. The Initiate PLC, nearly 3,000 also. Presco, 3,000% returns. You get so. So the point is this, right? These stocks have been accruing crazy wealth, right, over the 5 years, and I just proved to us successfully that but the dollar was not, lucky. It was not a magical stuff. It turns out that that stock he invested in was not the only stock. As a matter of fact, there are stocks that did even better than the stock that the dollar had invested in. Right. So this is what the stock market is all about. So someone will say, what really are these stocks that we're even talking about? Stocks. What stocks are is that stocks basically represent companies. When you invest in a stock, what you're simply investing that you are buying a part of that company. So that's why, like we said, when Otedela spends over 700 and please, can we hear me? I think there's a noise. Okay, awesome. So, in other words, we said that he has spent 789 points. Now, 780. So, why will a rich man want to spend this amount of money? Is he playing gamble? Is he, betting the money? Is it that he does not have something serious to do with that money? The answer is no. That money was spent in order to buy a portion of that company. And guess what? The moment he invested this amount, this amount spent actually translated to about 5.6% ownership of that company. So this, guys, is the power of the stock market. So how then do people earn? There are two ways people earn. Next time we'll talk more about this, but basically the way the dollar earned is called capital appreciation. He invested in the company when the company was cheaper, and then sold later on when the company had grown. In other words, the company had basically they had increased in value, so they were more expensive, and he was able to cash out big time. Another way many investors earn is called dividends. In other words, when you invest, we said that it's not betting, it's not gamble. You actually bought ownership of the company, and because you bought ownership of the company, that means that as the company is doing business, and as they are making profit or revenue, you have a right in that money that they are making. So they also get to pay you dividends. The dividends could be as high as 10% of the amount that you invested. It could be as low as 1%, 3%. But the point is that you get it. So think about that. You are enjoying payouts from the company. Your money is still growing. Isn't that interesting? This is the power of the stock market. So next time we're going to talk, but I'm just going to hint a lot. Many people, and this is the sad thing, guys, about many of us African, we even in this space, it's so sad that less than 3% of people, I mean, guys, everybody on this call, right? It's so sad that less than 3% of Africans know about the stock markets. It's so sad. And we keep wondering why the wealthy, the rich is getting rich and the poor is getting poorer. It's because we don't have this information, right? And the people that hear this information, guys, you will not believe we entertain this a lot. Questions like, are you sure it's not a scam? What if I lose my money? What if it crashes? I heard that the stock market used to crash. What if I sustain losses? What if I can't withdraw? All these things, right, are things that are well, especially in the Nigerian market, they are well, curated for. In other words, measures have been put in place to ensure that, number one, let's answer, for instance, what if I lose my money? You can't lose your money. And the reason is because the stock market is not like, maybe we say crypto or stock that you can just be wiped out. When you invest in a stock, you are not betting. It's not Ponzi scheme. You actually bought something. You bought ownership of the company. If it was in the olden days, you would have gotten, if it was in like years ago, you would have gotten like paper, you understand, to prove that you are now a shareholder of that company. So your money did not go into the air. You now own the company. So it's a tangible asset. You understand? So you don't lose your money. So what the worst that can happen is that that company can, maybe drop by 10%, drop by 20%, but you still own what you own. Is like you invested in a land. Even if the land reduces in value, does that mean the land has disappeared? No, you still own the land. But guess what? Because it's landed property, right? Some way, somehow, over time, you will still trust that it's going to bounce back and it's going to be worth more. What if it crashes? In fact, in the past 30 years, I don't think we've recorded more than 2 or 3 crash experience. And that crash is not even like it's crash. When we look into it further, you see that it was actually an opportunity that many people took advantage of. It was an opportunity that many people took advantage of because, and guess what? There were things that happened. There's more to those things. So it's not like, it's going to crash and money will disappear. No. As a matter of fact, there are many people that if the market crashes now, it is now that they will start pumping all their millions because it's like an opportunity for them. You get. So more on this data because the market doesn't just crash. Then what if I sustain losses? Losses is part of the journey. You get. In the sense of losses is loss until you have sold. I don't know if we're together. Am I carrying everyone along? I'm rounding up now.
Yes, sir. Yes, sir. Yes, sir. We are following. We are
Awesome.
following.
So losses is not loss until you have sold, until you panic and then you get out of the market. It's like saying you bought a land and then you start hearing that, oh, this land or this region, it will not grow, the value has reduced, and then you decide to sell your land. So if you panic and then you sell your land, that's when it becomes a loss. But the beautiful thing about the stock market is that, see, guys, and that's the most interesting thing. Do you know that literally like 80% of stocks, right, that fell as we are speaking right now, by company we've been looking heavily into because we are preparing heavily for next year, right? So we've been looking into AI stocks, specifically quantum computing stocks, in preparation for next year. Much of those stocks have falling by up to about like based on Fibonacci retracement, like they've dropped like up to like 60 something, 50 something percent, not like 50 something, 60 something percent of their value. If you understand, maybe tomorrow we'll discuss more about, but just that they've dropped from the previous gains that they did. So if they grew by let's say if they grew by 100% before, so they've lost maybe 50. If you did not sell, they've lost like 50% of that. So basically they are in good buy positions right now, and we've been looking at those and it's so impressive. Do you know that just this year alone some of those AI stocks has done up to about 500% returns? It's no joke. And there's so much happening in the industry that we are like, oh, 2026 is going to be hot. It's going to be hot for investors that take the opportunity. So it's not a loss until you sell, until you panic, right? So what you call losses, the rich call opportunities. You get. So, and that's exactly how Warren Buffett invests. In fact, Warren Buffett, sells when a company like he did last year. He sold 2/3 of his shares in Apple when Apple stock was flying. Like Apple stock was doing so well, and that was when he sold 2/3 of his shares. Why would he want to do that? Doesn't mean he doesn't want to make money. No, he understands how the game works. He understands that it's not all about going greedy way. You understand? You're looking for up, up, up. It's better, it's smarter, right, to invest in companies that are undervalued, to invest in companies that have dropped, especially when you can see the value, the long-term value in them. What if I can't withdraw? This is not a problem because when you invest, you are not giving, it's not CBEX, right? You're not giving your money to someone. As a matter of fact, you are investing through what is called a broker. In fact, the stock market is one of the most regulated markets. In other words, when you become a stock market investor, you are portioned CHN and CSCS number. So what that means is that even if the broker, like something happens to like Bamboo today or any of those brokers, your shares is not gone. Why? The more every share you buy, it is recorded in a database and it is traceable to your CHN and CSS. So 50 years, 30 years from now, you can still access those records. You can still access your shares and your money if it continue to grow. So why save when you can invest? This is the power of the stock market, guys. Once again, my name is Ifeanyi God's Favor. I'm founder at Neuro Bridge Technologies, and it's my pleasure to have taken you through this session.
Wow, wow, wow. Please let's appreciate Mr. Ifeanyi. Please let's appreciate him. You know, if you have ever heard of investment or study one or two concepts in investment, then there's no how you will not come across stock investment. No, there's no how you not come across stock investment. And I'm telling you the fact that Mr. Ifeanyi positions rightly in anything that concerns stock. You know, in stock insight, going into the investment of stock, it requires critical knowledge and understanding of how it works and also how to position rightly in that system. And Mr. Ifeanyi is strategically positioned. I'm telling you the truth. We have worked together, and during this year, if you notice, there was some time I was posting some monthly kind of ROI. It was just because of his insight. So he's the good person. He's the best person for anything related stocks. Okay, thank you very much. Thank you very much. We have indeed extended, used a little of our time, and I don't think we even have much time again. But now this will be in the question and answer time. Yeah, so I was just going through the chat and I haven't gotten any relevant question, but this is Q&A. Yes, so just in case you have any question, you can just call our attention, then we'll give you the mic so that you ask the question. Please, let's be snappy about it. Let's be snappy. Our speakers, Sir John Marvin is still here, and also Sir Ifeanyi, they are still here. They have other things to do. Okay, yeah, thank you very much. Somebody has raised his hand. Ada Gambo. Okay,
Yeah,
yeah,
Adagambo. Good
yeah,
evening.
yeah. Good evening, sir.
Yeah, I have question one each for each of the speakers.
All right, sir, you can go ahead.
For Mr. John Crossing, he talked about. I'm curious. He talked about wealth, being wealthy and being rich. I'm looking at it. I'm a layman, and I'm looking at it literally. Maybe there's a technical explanation to look at them differently. I thought they are literal words that can be used interchangeably, being wealthy and being rich. But I don't know. The way he said it is as if being rich is not being wealthy. Maybe there's a technical connotation to it. If you can help me understand it a little more.
Okay, okay.
Are we
Thank you, sir,
together?
for the yeah. Thank you, sir, for the wonderful question.
Then
Okay,
the second one is for Mr. Ifeanyi.
okay,
He talked extensively about the power of stock. Stock is a powerhouse, a financial powerhouse in a way, which is agreed. But again, he had put it very simplistically in the sense that he said stocks are not like Ponzi game, which is true. But stock, sometimes a company gets wiped out and the stock goes down. I had experience with Skybank. I had quite some good investment in Skybank. And Skybank went down and bought over metamorphosed into Polaris, what is Polaris today. But our deposit, in terms of the stock in Skybank, actually went down. So my question is, how can one envisage and try to forestall such eventuality? It's rare, okay, but it does occur.
okay, sir. Thank you very much. Thank you. I think we have gotten the question rightly. Yeah, so let's start giving answers. Okay, so I think the first one goes to Sir John Marvin.
Okay, can you hear me now?
Nothing.
All right. So, the difference between being wealthy and rich is like what example do I use now? It's like the difference between a classic sport car and a solid investment portfolio, right? So, if if you see someone driving a flashy car now across your street, you would definitely assume that person to be wealthy, right, or to be rich. But when it comes to being wealthy, wealth speaks more around, let's say, something like financial freedom. You understand? There's even between financial prosperity and, or let me say, there's even between financial breakthrough and financial freedom. Yeah, let me
Okay.
use that word. And then there is a difference between financial security and financial freedom. And there is a high difference between financial freedom and financial independence. These are different statements. So the highest level that describe wealth is what we call financial freedom. There are a lot of people that have financial security. If you have a job, you have financial security. You understand?
It's
If you
true.
can buy, if you can feed yourself, you own your apartment, you own your own car, you can take care of your day-to-day expenses and all of that. You are financially independent. You can do whatever stuff you want to do, but that doesn't connote wealth at the end of the day, right? So
Yeah.
when you talk about being rich, it's just like the scenario of the flashy car that I talk about. Now, someone
Mm.
can be rich at the same time be wealthy. You understand? Someone can be rich at the same time be wealthy. But when you say someone is wealthy, it is a kind of the summation of everything. That person, like somebody like Bill Gates, is a wealthy man because he doesn't have to think about money again for the rest of his life. And it's not because he has money locked up in one room, in one building. No, he has assets that will continue to generate wealth. You understand? That gives him that sense of financial freedom, because at that level of financial freedom, you're talking about financial abundance. Money is no longer your problem. You are not even thinking about money again. You are thinking about, because you have already set up things in motion that generate money for you on a consistent basis. But someone can be rich today, and before you know, a whole lot of other circumstances can just play in. So these words, being rich and being wealthy, are used interchangeably. And being rich is easy, but being wealthy requires, if you dash me 1 million naira now, I am 1 million naira rich, and I can say I'm a rich person. Right? If you dash me 20 million naira, and I will say I'm 20 million naira rich, and I can say I'm a rich person. But having 20 million naira doesn't make me wealthy. Having 1 million naira doesn't make me wealthy. If that 20 million naira can't sustain me or can't solve my money problem for the rest of my life, I can't consider myself a wealthy person, right? Because a wealthy person is someone that have you been able to use money to solve money problem. Like, you have put your money into different investment, and those investment keep bringing you return on investment, and those return on investment are funding your luxury, funding every other thing that you want to do. But a rich person can have money and buy a car. He's rich. He has money.
Yeah.
He bought a house. He's rich. He has money. He travel out of the country. He's rich. But all those things, I don't know whether I'm able to explain this thing
No, I think I'm
comprehensively.
getting you. I'm getting you. I'm
Exactly.
getting more enlightened indeed.
Okay, thank you. So when you talk about being wealthy, it's about financial freedom, and
Mm.
financial freedom is superior to financial security. You have a job
Yeah.
today, you have financial security, and you can lose that job, or the company can fold up, and before you
Mm.
know, your financial security is gone. You have somebody inherited money, next of kin. That's financial security. If the money
Mm.
runs out, the money is gone. The financial security is gone. So so, but when it comes to financial freedom is the superior, is your kata. So at that level of financial freedom, you are not, money is not your problem anymore, because you have been able to defeat the whole issue of money, and now money is the one working for you.
Your
There is
money is
nothing
working for you. Yes.
exactly. So
I can
that
understand.
is all. I don't know whether
I
I'm able
understand
to
it
answer
clearly.
you perfectly.
No, you
Yeah.
have. You
Thank,
have
thank you
clearly
very much, sir. Thank you. I
made
know
the
you,
point.
you did justice to that question. Yes, indeed, you did justice. Thank you very much.
Thank you.
What he
Yeah.
was saying is, um, that I got perspective on is that you can be rich today and you can, let me say, you can go broke tomorrow, but you cannot be wealthy and go broke tomorrow. So that is
Mm.
just in summary what he was trying to say.
So
Thank you
the
very much
wealthy
for
is
the technical
the more you are more, it's more enduring.
Yes, there's no system of replenishing. That is, if you lost the money, it is gone. But wealth now, you have the system that can keep generating the money. Even though you've lost everything, you can still replenish. Thank you very much, Samadu, for the wonderful question. Okay, the second question was is the second question.
Yeah, the second question has to do with the stock, investment
Yes.
in stock. Yes, I got it to the point that investment in stock can yield good dividend in terms of growth and whatever, in terms of returns generally over time. I agree. But of course, stocks do crash. And when they crash, they can rebound again. But in some rare cases, which had happened in Nigeria at one time, and in many climes too, it had happened. These are economic realities where some companies fold up. I mean, got liquidated. And my question is, such happened, for instance, with Skybank in Nigeria. Skybank, more or less, was bought over with nothing left for the shareholders. And at the end of the day, people lost their deposit in the stock. So the question is, how can one anticipate such scenarios of failures and exit at the appropriate time so that you don't lose your deposit? Because it would be too simplistic to say stock market don't crash and totally go with your money. No, it will crash, yes. It will now, of course, regenerate again, rebound. But there are cases where companies fold up, they go down with people's money in the stock. I'm not even talking of deposit in the bank.
Yes, sir. Thank you very much, sir. I think we have gotten your question now. Okay. So Ifeanyi will be doing justice to the question right away.
Yes. Yes. Can you hear me? Am I audible?
Yes, sir. Yes, sir. You are very much audible.
Okay. All right. Sure. So thank you very much for that question, Mr. Gambo. And by the way, it's good to have you here. So first of all, this was mostly an introductory session. So I believe that tomorrow we are going to lay more foundation on approaching that stock investing, because of course, I mean, the likes of Warren Buffett and many of the wheels both in Nigeria and outside, like Cotedola, they don't just invest casually. Okay, which hence brings us to the answer, the first stage response, answer to your question. How does someone navigate these issues? Of course, that's where learning comes. I mean, I just said something interesting. I said that, Warren Buffett sold to third of his shares in Apple at a time when the stock was skyrocketing. The question is, what did he know? You get, what knowledge did he have that advised his selling at that time when, the market was basically green? Actually, it was greener than ever. And what's even further interesting is that it's not even as if Apple stock has fallen from since then. You get, but you don't see him buying back. I don't know if we get. Rather, he moved his money to heavily undervalued food and beverage companies. And the question is just, what did he know? Right? So that's where learning comes. That's where working, with experts who can guide you, experts who watch the market. Because and part of the thing that we then come to understand is that the market is called the stock market, right? So it's a market, so no one goes to the market. No one goes to the market and buys things simply because it looks fine or simply because people are buying. I mean, is there anyone here that does that? You go to the market and you see where people clutter around maybe tomatoes, and then you start buying tomatoes because people cluttered around it. Is there anyone that does that? Definitely not. So in the same way, we don't buy, stock simply because people are buying this stock, or because that's what happens often, right? So in other words, there's a reason every time you buy something in the market, it's because you have a food in mind, right? Because you have something you want to cook. So in other words, the stock market operates same way. It's important, right, for the investor to know part time why they are investing. Why did you have the shares you had in Skybank at the time? I don't know if you're with me, sir.
Yeah, sorry
And
to
what
interrupt you, sir.
other,
So sorry to interrupt you, sir.
yes,
Please, Emmanuel
Emmanuel,
Basi, can you please mute yourself? Thank you very much.
thank
Thank you.
you.
You can write on,
So
sir.
why did you buy the shares that you bought in Skybank at the time? Right? And more importantly, was that the only stock that you had possession in? What was your overall goal? So these are the things that come together, right, to literally define how you invest. And by God's grace, these are some of the things we're going to look into. And then finally, I really want to lay so when I said something, I spoke about stock market crashing, and I would love to draw a firm distinction between stock market correction as against stock market crashing. We live in Nigeria. Are we together, please? Can we hear me? Can we hear
Yes,
me,
sir. Yes, sir.
everyone?
Sure, sure, sure. We can
Oh,
hear you.
awesome. Okay,
Yes, sir.
awesome.
I'm with you.
Okay, great. Yeah, so we live in Nigeria where panic is in the air, fear is in the air, and because of that, we tend to call things that are pink. Like it's natural and easy to go extreme on things, and this is why over time we've come to attribute the word crash to when we see a stock. For instance, I just told us something, right here. I told us that, much of the quantum computing stocks that we've been observing for some time now, that much of them have lost 60% of their value from their previous, high. I don't know if we're together. Now, not to say that they fell by but if you literally look at the chart, you would see that, okay, this stock had done, let's say, about 100%. And, if it didn't sell, it has come back down to about 60%. I don't know if it's now someone would call that crash. Are we together, please? Yes, someone
Yes,
would
sir.
call
Yes,
that
sir.
crash.
Yeah.
That, oh my God, this stock is crashing. I mean, that happened so many times, this year with the US market. US market is just up and down, up and down. So the market correction is healthy. It does not make sense. In fact, it is wrong. It is a problem if you look at the market and everything is flying. It's a problem. And guess what? This is exactly what happened in 2008, okay, which was not even peculiar to Nigeria alone. It was actually a global. Yes, sir.
I said that is true.
Yes. Yes, thank you, sir. So it was actually a global market crash. And I could go on to give us the history behind that crash. And then we then find out that this was not just a market thing, you get. It was not just a stock market thing. It was a people thing. Mortgaging houses, lots of things had come in to precipitate that crisis. And guess what? That was not the only, the time it happened earlier than that was in 1939. Okay, when the whole world was put into it was called the Great Depression. Actually put together. So my point is this, all right? There's a difference between market corrections and market crash. When stocks fall heavily, it is a beautiful opportunity to go heavy on. Why? It tells us that a stock drops does not mean. Oh, sorry, I don't want to take so many things are coming to my head. For instance, between 2004 and 2012, Facebook, that's Meta, had grown by about 8 million users. Isn't that interesting? Like 8 million users. Their stock you get was basically spiking and all that. But could we believe that just at the peak of their success, I mean, this was the year 2012, they were already hitting about 8 million users or so. Can we believe that their stock had plummeted in that 2012 by about 50%? How do you explain that? Today, where is Meta? If you had invested in Meta when they crashed, in quotes, then compared to now, how wealthy would you have been now? Are we together? So I just, bringing all of this together. By God's grace, tomorrow we should do more justice to this. Thank you, sir.
Thank you so much. Thank you so much,
A
sir.
pleasure, sir.
Let me just add, he will be having a more, really, a more explicit session tomorrow. This is just a kind of foundation. It's just laying a foundation. So he will also be having a session tomorrow. So I think that is also a best place to come prepared to come and get more insight about the stock market. Yes, thank you very much. We are we are out of our time, and yes, we're out of our time. But let's just do one more question, just one more question. This a very intentional question, just one more question, a very intentional question. If we don't have any question, okay, I think there are no responses for questions. I think there are no okay. There's a question in the chat. Okay, the question is, how do we know the right stock to get involved with or partner with? Okay, I think more insight on this will be coming in tomorrow. Yes, more insight will be coming in tomorrow. But okay, Sir Ifeanyi, maybe just give a little insight on this. The question
Okay,
is,
sure.
okay, yes, how do you
Okay,
know the
sure.
right stock to get involved with or partner with?
Ultimately, if we were to formulate a principle for stock market investing, it's one word: buy companies that are undervalued, right? That holds, that holds either short-term or long-term benefits, right, or potential. Invest in them while they are yet low, and then sell off, why they are when they become high. So that's it basically. By God's grace, tomorrow we should do more.
Right, sir. Thank you very much. Like I said, he will be diving into the technical aspect and also the fundamental and other interesting aspect about the stock. Everything has to do with go with concise knowledge and understanding. Okay, so thank you very much. I know we have extended into out of our time, and this is even 30 minutes out of our time. Thank you very much for your patience up to this time. It is good that we come early next time. And also, I'm apologizing. I'm not supposed to be the moderator, yes, and that's why I see that I'm just trying to fix it up. She reached out to me telling me that okay, there was some sudden thing that just came up, and I hope tomorrow we'll be having our on set, and the session will be more lively. Yes, just manage me. Yes, just manage me. The session will be more lively. But then let me just use this opportunity to also thank Mr. Williams. He's active with us in this call, and I was so impressed to have him join this call up to this time. He will be speaking tomorrow. So I'm just appreciating him. Thank you, Sir Williams, for staying up to this time. Also, thank you, Sir John Marvin. Thank you so much. Thank you so much. Thank you, Sir Ifeanyi. We'll be meeting tomorrow, 7:30. Please, we are going into strategies now for building wealth. This will be more enhancing, and I'm telling you the truth, you don't want to miss this session. This is what we call update and insight. Yes, so thank you very much. So we will keep updating. We will look for a way to see how we can get the recorded sessions so that we will also update it in the groups for reference purposes, as the case may be. Yes, until tomorrow, guys, any further update will be communicated in the group. Thank you so very much. Thank you, Sir Williams. Thank you, Sir John Marvin. Thank you, Sir Ifeanyi. Thank you, everyone who made out time to be here. Thank you very much. I can see my bosses. Thank you. You did well. You did well. We are growing financially, and I tell you the truth, this is a step taken with intention. There will be reward for sure. Yeah. Thank you very much. So 7:30 we meet as well. So let's thank you very much. Thank you. Thank you. Thank you. Yes. So I think it's a good time for us to say bye for now till tomorrow. Till tomorrow. Just make sure you set the time. 7:30 will be 7:30. Yes. Thank you very much. I so much appreciate your